Good afternoon, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a Strategy of the Day update for July 14th, 2021. We're going to be taking a look at the November and December corn and beans, respectively. Taking a look at the 4-hour chart, working our way down to the 15-minute, and beginning with some weather forecasts as things over the last couple of days have shifted. That gives us some of that fundamental upward pressure on price in this time of year for weather markets, and we'll see how that all plays out. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. But with that being said, let's take a quick look at the 6 to 10 day forecast here. We've shifted now to have a nice hot and dry condition sitting right over South Dakota and northern Nebraska, being the heart of it, expanding out into Minnesota, North Dakota, all the way down through Iowa into Kansas as well. Of course, most of the Corn Belt here through Missouri, Indiana, and Illinois is going to be at least 50%, it looks like, below that probability of precipitation and below their average precipitation for that time of year. So not that much of a problem for that neck of the woods, as we saw obviously good weather and a lot of rain over the last several weeks there. Rain's been bringing relief to most of the Midwest. However, now that we're getting through it, and these forecasts have shifted in the 6 to 10 day and the 18 to 14 day to these dry conditions over and throughout much of our growing regions, it ends up becoming a weather market that inevitably has been trading within a range. Last video we talked about that range that has been playing out, and December corn ends up really, taking it to a whole new level because the narrative that we've discussed was how $6 corn represents at this time, peak weather premiums, whereas $5 corn apparently is where demand is willing to come in and start to price ration a bit because we're obviously starting to get to a point where carryouts, particularly on a global perspective for corn, are starting to get a little tighter. We're seeing that 5 million metric tons come off of that Brazilian crop. Certainly was a good surprise, I think, to the markets, and is going to keep some of that demand right here in the U.S. Market as well. So December corn in the short term, we've started to break above that gap open from July 6th, where we opened and traded limit down. We're starting to go above that 545 to 550 range here today, trading to highs of the day of 562.75 in December corn, holding trend lines against the lows, higher highs, higher lows throughout the daily candles. At this point in time, it looks a lot like we're starting to break through resistance that could have kept the market in a downtrend. We've started to hold the lows, or continued to hold the low end of the range towards this $5 handle, and we've got an open technical gap fill up around the 578 area, where this market seems to be a bit of a magnet to. We're going to continue to watch trend lines against highs and lows here as this market is continuing to channel, and actually is starting to expand out of that channel here a bit, but for the time being, we kind of pressed into those and above those channel highs. That's definitely indicative of a breakaway or runaway type price action. So I would not, however, be surprised to see the market fall back to test this trend line support somewhere around 545. That is also this inflection zone that we gapped down into. Was a little bit of resistance there yesterday at the 547 level. Certainly was supportive on our first day down here, and resistance on our second day as we held and pushed down to those new lows. Now that we're through that area, there isn't much but air above until we get back to this prior highs and the congestion zone that's above us around $6 and above. The 580 area is that open gap fill from from July 6th. So we're going to continue to watch and see if corn can make it all the way there. And at this point, the trend is your friend. We've had nothing more than a sideways market that has been ranging for 3 months. We found the low end of that range. We're starting to come up off of that range, making higher highs and higher lows. Buy the dips, hold it if you got it, and look for the market to head towards 580, in my opinion, in the near term. And we should probably be then considering where's that resistance zone and that trend line against highs that if we break above, could open the door towards the $7 and mythical $8 corn. which not saying it is going there, but we certainly have conditions and potentially weather markets that could support it here going forward. Now, production is what it is. We got the pegged acreage in our reports, and trading into the August WASDE, we're going to be looking for that acreage number, or excuse me, yield number to come out of the USDA's pause. So in the very short term, again, there's a trend line against the lows here that I would say has now sloped up and is coming in around the 540 to 545 area. That is, again, where the congestion zone that we saw and resistance both yesterday evening and through overnight until this morning's bell, where we rallied through price and took ourselves to new highs. So any kind of pullback towards 550 to 545 is where I expect to see some support on this market. And in other words, trending a market that's trending higher and ultimately towards that 580 area here on the 15-minute time frame as well. All right, so November soybeans, the 4-hour chart, much like corn, finds itself locked inside of a range. The only difference here is that we don't have as prolific of weather markets for soybeans right now as we do for corn. The soybean, obviously, being a couple weeks later in terms of making its fruit and starting to see that grain develop and fill out the pods, our weather markets are really more towards the August calendar timeframe. So starting to break above now trend lines against the highs. Pretty much every resistance you can find inside this range is breaking. We've now traded up, into the gap fill here. And the full gap fill to hit our prior close would be a 1396 print. So getting a nice channel here going higher. Channel support is down around the 1368 area. And if you look here, and as we'll go down to a 5-minute time frame here, you got to wonder and question, did we just have a gap here on this open? And that's something worth discussing. I love this kind of technical price action. Yeah, there was a pause in the market. We opened and the market just kind of moved higher. So I'm very interested to see if this level ends up kind of being treated like an open gap right now. We're going to go ahead and put it on the charts as such because it does show by a fraction of a tick here, by a quarter penny, a gap on the open this morning, and a full gap fill would be for a move down to 1361 quarter. That area, interestingly enough, is where trendline support kind of comes in. I'm sure we could find a fib somewhere in that level. I think from today's low to highs, it would be about 50% of the range there. So a nice technical supportive area around 1365 to 1360 that if beans pulled back to on the small time frame or the shorter time frame could keep the trend going higher. Of course, this is assuming we don't just rifle up and through the highs and see what happens. Now, I wanted to start with the small time frame here and then work our way out on soybeans because we have a larger wedge-like formation forming. So we have a trend line against the highs from our 1480 highs through the highs 2 Thursdays ago on July 1st. The $14 level is where that trend line comes in. It's right where that open gap is. So if we continue higher, just straight up into that area, and then we start to pull back, that pullback I'm a little concerned about. I want to see it hold and prove itself, but on a push back higher above 14 again, if that were to come, would be a very technical breakout type of move for soybeans. And out of a wedge-like structure that it's forming. Now, I wouldn't be surprised to see a bit of a pullback after trading up towards 14, either trading back towards $13 to $13.20 or to test the trend line support for the lower end of that wedge as well. But continue to watch the 6 to 10 day and the 7 to 14 day forecasts because they seem to be dictating weather markets as they are. With all that being said, watch the U.S. dollar as well. We started to see some strength in the U.S. dollar and actually then now a little bit of a range and perhaps that strength starting to get faded. Watching that as a very important indicator for potential export season beginning here and starting to, of course, anticipate maybe seeing some flash sales now that the markets are starting to really queue up. Now, it'll be interesting to see if we see strong exports and flash sales on the way up. That will be, that real kind of supportive fundamental trade behind the carry trade wins, if you will, behind taking grain prices higher, coupled with weather markets, of course, could continue to batter us into the high end of the range. Now, that is a brick wall that has yet to break. So, getting above $14, above $14.20 for November soybeans, and certainly to new contract highs, that is an untested paradox yet, or question yet. The December corn could be much the same way for a crack above $6 now. So we need to see those levels break and prove themselves to really get behind the technical trade here, and of course the fundamental narrative to continue with those tightening carryout situations for both row crops. So with all that being said, thank you for joining me. Hopefully we can continue this discussion at another time. Feel free to give me a call, 312-277-0110, to discuss all of your marketing, hedging, trading, and commodity risk management needs. You can find me on Twitter. My Facebook, you of course already know, and then dhussey@zaner.com. Feel free to shoot me an email with any questions, comments you might have. Leave your likes and your comments in the section below. Check out the link provided in the videos section there, where you can sign up for the entire Zaner Ag Hedge team's daily commentary and get our free daily newsletter through that link. With all that being said, have a great day, everybody, and I'll be back with you as price action develops. Take care, everyone.